Okay, so you have what? Poppy Berhad owns 100%. So this is the wholly owned subsidiary. Yeah? During the year, Poppy sold goods to Seed. So this is Poppy, this is Seed. Who sold to whom? Poppy sold to Seed. So this is a downstream. At 50,000, margin 20%. So this given to you, the 20% is based on the selling price because it's margin. Okay? So 50,000 is the intra-company sales and purchases. 30% of these goods had been sold. Sold. Out of the 100%, 30% sold. That means unsold is 70%. 70%, you have to times by what? What is the value of the inventory that is intra-company? 50,000. And then margin. 20%, so you just 20%. Okay, so 70% times by 50,000 times by 20%. So you're going to get the answer A. Okay, so you are supposed to offset the profits from URP from whose books? From Poppy's books. Okay, next one. Which of the following statements is true when preparing the consolidated financial statements? Intra-group balances between parent and the subsidiary must be eliminated. Now, I owe you, you can receive from me between parent and the sub must be eliminated. Yes. Okay, then just now I asked you already, right? Intra-co balances between parent and the subsidiary, must they be eliminated? No. But you have to show them as a separate line. Amounts receivable from the associate, amounts payable to the associate as a separate line. Okay? All URP on intra-group transaction between parent and the subsidiary must be eliminated in full. Correct or not? Yes. All URP on intra-group transaction between parent and associate must be eliminated in full. Correct or not? No, huh? So, 1, 3. Okay? Next one. Maybe you should do rather than I do. The more I do, the more pandai I become. Alright? People just sit down there. Okay. Popeye owns 80% of Sailor. So Popeye PP is the parent, S is the Sailor, Sailor is the sub. During the year, Popeye sold goods to Sailor. So Popeye is here, Sailor at the bottom. Popeye sold to Sailor. So always remember, see the keyword sold to draw the direction of transfer. 500,000 markup 20%. 30% of these goods remain unsold. Okay, so value of the inventory unsold intra-company is 30%. So what is the requirement? Calculate the URP that needs to be adjusted to the retained earnings of Sailor. Who is Sailor? When calculating the GRE. So the question asks you, you have the direction of transfer that is this way. From whose books are you supposed to offset the URP? From the seller. Who's the seller? Parent. So, in other words, if the question requires you to calculate URP to be offsetted from the retained earnings of the buyer, is there any or not? No lah. Answer is no. Okay, you got that? So it does not mean that if you have all the figures, you just don't need to read the requirement of the question and then just calculate every time. Okay, then you have the next one. Pick owns 60% of the 500,000 ordinary shares in Shovel on 1st Jan 2018. Okay, 1st January 2018. 60% means that this is the holding company, this is the subsidiary. Purchase consideration comprises of what? Cash, share exchange. Okay, so how much is the cost of investment? The question asks you, calculate how much is the cost of investment in Shovel. So basically it will be what? Cash, 100,000 plus with share exchange. You take note how we do the share exchange. How many shares did you buy? 60% of the 500. So which means you bought 300,000 numbers of Shovel shares. Okay, so they tell you plus a share exchange of 2 shares in PIC. PIC is who? Holding for every 3 shares in Shovel. So which means numbers of shares that you bought in Shovel, every 3 you are going to exchange it for 2 of the holding company shares, and each one of the holding company shares is worth $2.20. Okay, then you campur tolak, you are going to get 540. Okay, next. HH owns 40% in AA, 80% in SS some years ago. So associate, subsidiary, holding. Revenue of HAS, blah, blah, blah. Did I put in the wrong sequence or not? Okay, never mind. HAS, so much, that's the revenue. Calculate the revenue to be included in the console SOPL for the year ended 30th June 2020. So, consolidated revenue is supposed to be what? Take holdings figures, associates figures, we do not console, isn't it? We equity account. Then we campur this. So 200 plus with 150. Okay, so 350. Why is it that we do not take into account the associates reserves? It is because associate is equity accounted. Next one. And this one because some of the students asked me directly, yeah? So you look at this. This is also one of the questions that just now we've seen, quite a number of students make mistake one. Pineapple owns 70% in strawberry on 1st day of July 2019. Okay, 1st day of July 2019. For the year ended 31st March 2020. So which means what? July, August, September, October, November, December, January, February, March. So you only have acquisitions in strawberry as a subsidiary 9 months into the year. Okay, strawberry, 9 months only, the status as a subsidiary. Strawberry reported a profit after tax of 120,000. So this is your PAT. During the current financial year, Pineapple sold goods to Strawberry. So Pineapple sold goods to Strawberry. So it is downstream. Okay, at cost plus 40%. All these goods were sold to outsiders during the year. So long that the goods that are sold intra-company has left the group boundary, there is no necessity for you to calculate the URP. Understand or not? Why do we calculate the URP? The rationale is that, number 1, the goods were sold intra-company. Number 2, the goods has not left the group boundary. So if they tell you that, oh, it's bought between brothers and sisters, but eventually by the year end, all the goods has been sold to the outsiders. Then no need to calculate URP anymore. Okay? So, what was the question? Calculate how much is the profit attributable to the NCI at the console SOPL. So, just calculate accordingly to the NCI because you bought 70%, NCI is 30%. 9 months. PAT, 120,000. There is no necessity for you to take into account any URP. Okay? Next one. Calculate URP on the intra-company sales of land. Okay? So, which means that this one again is the URP, calculation. So, acquired 80% in the sub on 1st April 2017. During the financial year ended 2019, Serga sold the piece of land to Hebat for 150,000 above the carrying amount. So, which means that this is the profit element. Okay? If you sell non-current asset between members of the family, suppose you should not realize the profit because it's from your brothers and sisters. Okay? So, during the current financial year ending 2020, 31st March, Hebat sold to Serga a machine with a book value of 100,000 for 140. So, again, there is another profit which is 40,000. Okay, but what did the question want? And of course, this one that it is subjected to depreciation. Okay, so in this case, what do you have? URP on the sale of land. So URP on the sale of land, basically you don't need to bother about the machine, isn't it? So the URP on the sale of land is 150. Okay? Machine, of course, you have to calculate. Just now 40. Next one, based on question 9, they ask you, how much is the URP on the intra-company sales of machine? URP, we already computed as 40,000 difference. And then the question asks you, how much is the depreciation effect? Okay? So, which means that you have to calculate how much is the depreciation based on this 40,000. 10% per annum, straight line basis. So, this is during the year. Okay, during the year. So that means only 1 year. So, when you calculate, how much would be your depreciation? Depreciation is your 40,000 times by 10%. So this will be your 4,000. URP 40, and then this we will say as depreciation. Depreciation overcharge 4,000. Okay. URP 40, depreciation overcharge 4,000. So it will be C. Okay. This one is your investment in the associate. Okay. For the investment in the associate, just take the cost of investment as given by the question. The question tells you when you buy the 35% investment in SOSO, you paid 140,000. Okay, they made a profit for the year to 30th June 2020 of 260,000. Okay, so which means share of profits 260,000. But when you bought it that time, it was on the first day of January 2020, year end 30th June 2020, which means from here to here, the status as an associate only happens 6 months into the year. Okay, your share 35%. They tell you that they paid a dividends of 80,000 on the first day of January 2020. So this particular dividend was paid in the post-acquisition period. So which means you just straight away take the 80,000 times by your share, which is 35%. You campur tolak, this will be the investment in the associate figure to go to the console SOFP. This one, how much is the pre, how much is the post RE in cent? Okay, this one basically you can just draw a timeline. H acquired 80% of S on 31st December 2019 for 150,000. Retained earnings of SEN on this date, 1st April 2019 was 100,000, and the profits for the year 2020 for the year ended 31st March 2020 was 50,000. Profits are deemed to accrue throughout the year. So, which means that over here, your year end is 31st March 2020. When do you acquire? 31st December 19. So this is as good as what? First day of January 2020 lah. Okay, so which means here to here, 3 months. Here to here, 9 months. Okay, so how much is the pre-acquisition if you have such information? Profits for the year, 100,000. Retained earnings on the first day of April 2019 was how much? This figure, 100,000. So, we just split. This is the cut-off point. 100,000 must be the pre, plus together with the profits for the year, which is 50,000, but you take 9 months only. So, pre will be 50,000, but you only take 9 months into the year. So the post will be how much? Take the 50,000 times by 3 out of 12. Okay? This one, what is the answer? C. Okay? So this one is also very easy. So this one no need. This one also no need. We see got any other more interesting questions? I think they are all quite simple ones. We look at Heron. These are all simple ones, so no need. We look at this. Question number 18. Heron owns 80% of the ordinary shares in Sparrow. Goodwill arising from the acquisition of Sparrow was impaired by 10,000. So this is the impairment loss. And NCI in the group is measured based on fair value. So, which means what? When you measure the NCI based on fair value, you are calculating the full goodwill. So, when there is any impairment, impairment loss needs to be shared between the parent and the NCI. Okay, in what proportion? Parent 80%, NCI 20%. Okay, so you just share. 8,000, 2,000, 10,000. Okay, I think this one also quite simple. Okay, so this was a simple exercise. Let me just in case you want to refer to it, I will just upload it to the Teams. because I already closed the submission already, and I know some of you missed it. So if you miss it, you just look at this file and then you should be able to get the question. Okay? So, and also revision question, 2 revision question with respect to the basic console. I already uploaded the answers at the Teams. I think that one maybe you can just run through by yourself. Okay? So some of those are a little bit peculiar. If you have any questions, then you can ask me or you can ask your tutors. Okay? Because this one